Welcome to People and Profit. This week, a special programme looking back at 10 years since the spectacular collapse of the investment bank Lehman Brothers. Coming up, at the centre of a global financial firestorm, we speak to a former executive at Lehman's French business about that day in 2008. More rules and closer scrutiny, the head of the OECD on what we learned from Lehman's collapse and whether it'll help us to cope with the next crisis. And from Wall Street to Iceland, how the island nation's banks fell victim to the post-Lehman credit crunch. Now, it was the event nobody believed could happen, but came to symbolise the beginning of the global financial crisis. After more than 150 years in business, the investment bank Lehman Brothers went bankrupt in September 2008. With more than $600 billion in assets, it remains the biggest company failure in American history. Lehman's collapse hit 25,000 employees and sent global financial markets tumbling, a sign of the recession that was to follow. So what was the end of Lehman Brothers like from the inside? I've been speaking to Xavier Rolet, who worked there for 9 years and was the head of its French division when the bank went bust.
And clearly, these are events that one does not forget. The first thing I remember is the almost impossibility of reaching anyone, either in London or, more importantly, in our case, in New York, to ascertain the status of Lehman Brothers. So, and I know many of my colleagues, not just in the French office, but elsewhere around the world, tried to reach senior folks in New York, CFO and others, and we simply couldn't get anybody on the phone over the weekend that could tell us what was going on. We were hearing, of course, reports and rumors, but when Lehman filed for bankruptcy, essentially we found out from the press.
Did you have any indication that this was coming or that it was so close at the time?
It was pretty clear that in the second quarter and the third quarter of 2008, things were not going in the right direction. But the message we were getting from New York is, this is basically a cabal against us, a number of hedge funds or arbitrageurs seeking to put pressure on the company. And the message we were getting from New York is the company is healthy, the company has strong assets. Yes, we've made investment, but we're essentially in good shape. So that was the message that we continued to get very, very consistently from the leadership in New York and also London up until about June, July of that summer.
When you looked at the other bank rescues that were taking place at the time, did you ever expect that a bankruptcy could happen? It seemed so unlikely at the time.
It's clear that the decision ultimately not to bail out Lehman Brothers, but, for example, to bail out AIG 100 cents to the dollar, which was taken by the US government and no doubt saved a number of other large banks, Americans, but others as well. Goldman Sachs, no doubt, given their exposure to AIG, Société Générale in France, and many others. There's no doubt that the way that decision was made sought to balance, the interest of financial stability on the one hand, and on the other side, the political pressure, the very understandable political pressure not to offer the financial services industry a free put had it mismanaged itself. I suspect that for many decades, more analysis, more books will be written about whether Lehman Brothers should or should not, in that case, it wasn't saved, or maybe perhaps should have been saved. But the bottom line is this: if you look at the bigger picture, over the last 250 years or so of recorded history of our modern capitalist economies, major crises have always come from the same source, have had the same effect. They've come from our inability to properly measure, monitor, control, manage, and regulate leverage, i.e. debt, in the banking industry.
Now, you went on to become the chief executive of the London Stock Exchange afterwards. How did your experience at Lehman Brothers change the way you approached your career afterwards?
That's a good personal question. Clearly, it's not an experience that I recommend, but having studied in various business schools and other academic institutions, I would say that living through a cross-border bankruptcy experience is obviously a prime lesson in the value of a good legal system and value of governance principle, and one that is worth any MBA or advanced educational degree one could get. I would add that the operations in France did actually not go into bankruptcy. They were saved from even judicial administration owing to the extremely pristine nature of the balance sheet and very, very sound management principles that were applied by the team to all the operations that were run by Lehman Brothers in France.
So has the world learnt its lesson from the collapse of Lehman Brothers? Let's speak now to Gurria, who's the head of the Organisation for Economic Cooperation and Development here in Paris. Mr. Gurria, thank you very much for speaking to us on this. The OECD's job is, of course, policy. From a policy point of view, what did we learn from what happened to Lehman Brothers?
Been a lot of progress in terms of the stability of the financial system. Remember, that's where the problem started. The banks are, 7 to 10 times better capitalized than they were then. There's been an improvement in the regulatory quality and the supervisory quality. So, in that sense, more stability, better regulation, better supervision makes for a more stable banking system, financial system in general. Have we learned from the question of size? Not really. In fact, the banks, the too big to fail syndrome appears to still be there because the banks are becoming very, very large, and there's mergers and there's absorption of some other smaller banks. And then the question is that if you look at where the debt problems are today, there's no longer with the sovereigns, it's mostly with the families, with households, and also with the private sector, with the companies, sometimes even with state-owned enterprise.
When we look at financial regulation now in the wake of everything that's happened over the past 10 years, is it strong enough in your view?
We understand better the implications. We understand what is at stake a lot better than before, and we know the systems, each regulator in their own country, in their own system, and also because you have banks, and then you have investment banks, and then you have, the funds, and you have all sorts of different financial institutions depending on the sophistication of each market. But in that sense, I think we've made a lot of progress. But as I said, there are new threats, and how are we going to combine the normalization of interest rates? How are we going to combine the desire, of course, of banks to continue to lend, while at the same time we ask them for prudence, to know their clients and to have greater reserve requirements, etc. But also, how does that match this trend towards deregulation in certain markets, particularly in the United States, when supposedly what we were doing was consistent with the lessons we learned in the crisis, because we don't want this to ever happen again?
Are there other areas in which a lack of regulation is worrying you if we're trying to look for where the next crisis might come from now that we've fixed the banks, as it were?
There's still maybe one or two more countries where the homework was not done fast enough or thoroughly enough, and they have to catch up. More generally, I think with some consolidation, with also some recapitalization of some, mostly in Europe, that still had to do some homework in terms of capital that they had to raise. I think, as I said, one feels more comfortable with the financial system. And you really feel that today the problem is more in the political sphere than in the what are called macro or in the policy sphere. And there, well, one has to be aware of these elements that have to do with politics in order to deal with the policies.
Okay, and remaining prudent as always. Angel Gurria from the OECD, thank you very much for speaking to us. Now, the bankruptcy of Lehman Brothers set off a global credit crunch. One of the first victims was Iceland's overgrown banking sector. It collapsed within days of Lehman's failure, leading to some of the strongest political and legal consequences of the crisis, and one of the strongest recoveries. Brian Quinn reports.
In Reykjavik, the recovery continues. A decade after the global financial crisis ravaged the Icelandic economy, a construction boom is making up for lost time. This building overlooking the bay was repossessed in 2008. It's recently been repurchased by its developer.
It's been standing like this for 10 years, for a decade. But now we hope to bring some life to it.
In September 2008, the credit crunch that started on Wall Street quickly burst the bubble of Iceland's bloated financial sector. Within weeks, the country's 3 largest banks had been liquidated. During the crisis, Iceland saw its economic output cut nearly in half. The unemployment rate nearly quadrupled. In the years since, tourism and exports, helped by a weakened krona, have fueled a spectacular economic resurgence, with 2016's growth hitting 7.2%. But many are still struggling with the aftermath of the crisis. This family bought their home just before the collapse. At the time, the interest rates of most mortgages in Iceland were indexed either to stable foreign currencies or to inflation. When the crisis hit, the krona lost 50% of its value against those foreign currencies, and inflation shot up to 18%.
When the banks collapsed, the exchange rate more than doubled. So the amount the bank now wanted to collect was more than double what we had borrowed.
In 2010, the Supreme Court ruled such mortgages illegal, and banks were compelled to forgive mortgage debt equal to some 13% of GDP. Still, thousands lost their homes to foreclosure, with many more forced to sell in order to pay their debts. For them, even the island's strong recovery can't make up for lost time.
So now it's over to you. How did the crisis affect your life? Get in touch with us on Facebook at France 24 Business, or you can tweet me at NewStephen. Until next time, thanks for watching.